What's going on, guys, and welcome back to another very exciting video. In this video, we are talking about one of my favorite stocks in the stock market right now, and that is Alibaba stock. And Alibaba has had some news come out over the last month or so with the audits, and the audits are looking very interesting. And specifically, when we actually look at some other Chinese companies, they are actually making moves coming out of the audits that kind of tell us, whether the audits are going well or poorly. So we're going to take a look at all that in this video. We're going to take a look at the stock price for Alibaba and how it's kind of reacted to some of this news and give projections based off its earnings and some other factors that are going into 2023. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. I want to start off the video by taking a look at Alibaba's share price and where it's moved over the last month or so. What we are looking at is news that came out around this time period. So around the 13th, 14th, 15th. And what's very interesting is the stock actually gaps down in this time period. So we can see the stock going from around $91 down to $86 over this time period. And that's interesting in the sense because what we are going to see here in a minute is a lot of positive news coming out of China. The delisting concerns seem to be melting away. We are seeing quotes from auditors that actually, basically led the group in China that are saying that they were given full access, that they're seeing a lot of positive things. And overall, the market reacted in a negative way. So that is the opposite of what we thought. We kind of were anticipating a move to the upside, getting a lot closer to that $100 to maybe even $120 range. We saw a lot of support at both of those kind of prices around the $100 and $120 range. So it was a lot of anticipation to potentially get back into those ranges and form, more stability around those price points. And the article we're actually taking a look at here today is Chinese firms advert delisting as U.S. audit watchdogs get full inspection access. And you can see here that this was posted on December 15th. So again, a lot of that news being, developed and talked about in the market over the 13th, 14th, 15th. And that's when we saw that, $5 to $6 drop in the market from around $91, $92 down to $86. So the U.S. accounting watchdog on Thursday said it has full access to inspect and investigate firms in China for the first time ever, removing the risk that around 200 Chinese companies could be kicked off the U.S. stock exchanges. The statement from the Public Company Accounting Oversight Board marks a victory for the U.S. regulators and a relief for Chinese firms, including Alibaba, facing delisting. So this is absolutely huge news because, again, there's 200 companies from China that are listed on the New York Stock Exchange that all have the potential to be delisted. And this all came about, in early 2020 when a lot of lawmakers basically passed that, these auditing practices need to be followed throughout all companies listed on the New York Stock Exchange. And a lot of these Chinese, companies wanted to refuse, and the Chinese government in general was the biggest opponent to this because they listed, security concerns, national security concerns that this could impose on China. Here we have the comment that I mentioned earlier. So this is a comment by the PCAOB chair, Erica Williams. And basically what she has stated here is, for the first time in history, we are able to perform full and thorough inspections and investigations to root out potential problems and hold firms accountable to fix them. So this is absolutely massive because basically what they're saying is they are able to go into China and actually look at the books for these companies and basically point out any issues that there are with the actual accounting practices that these Chinese firms are taking and make sure that it's consistent with the rest of the market, right? You wouldn't want Chinese firms doing their accounting practices in a very significantly different way than U.S. firms, where it might make these Chinese companies look a lot better than, U.S. firms, or U.S. firms look a lot better than Chinese firms. You want to at least try and create a very level playing field where investors are able to see the companies, see the information behind the companies, and, make accurate investment decisions. That's really what it comes down to. So overall, very positive comment from the PCAOB chair, Erica Williams. I also highlighted in green a short phrase here by the chief market strategist at B. Riley Financial, Art Hogan. He basically said, this falls into the category of a game-changing view for Chinese companies because the threat of their delisting seems to have been eliminated. And this is absolutely massive because what you will see as these delisting concerns start to go go away is a lot of these big hedge funds starting to put money back into Chinese firms. And we really need to see that money coming back into these firms to see the stock prices to move up in a very substantial way, right? If, it's just retail investors in a lot of these companies, then you're not going to get a lot of price movement. There's only so much money that could come in from retail investors. But once you start seeing these hedge funds dumping millions and billions of dollars of money into these companies, then you'll start seeing those bigger moves from these Chinese firms. And on top of that, we are seeing some additional other things coming out of China. So Pinduoduo, who is actually planning on doing a dual listing on the New York Stock Exchange and the Hong Kong Stock Exchange, has actually pulled or canceled their plans to list on the Hong Kong Stock Exchange. So when these delisting concerns came out, a lot of these Chinese firms started to look at potentially listing their companies on the Hong Kong Stock Exchange. And, that was basically to mitigate some of the risk of their stock price falling in a very major way, which it still would have if you pull out of the New York Stock Exchange, because that's the biggest market in the world. But overall, they were trying to look at, basically mitigating some of that risk by listing in Hong Kong. But now to see some of these companies actually pulling out of those plans, that's overall a very positive news. That's very good news that, at the end of the day, they are working with the US. They want to stay listed on the New York Stock Exchange, and the Chinese government, at least is somewhat supporting these plans, with these companies, pulling out of potentially listing on, Chinese stock exchanges. So overall, very positive there to see these companies, start backing out of that and focusing just on staying listed in the US. What's interesting though is when you look at a lot of these Chinese companies over the last month, they have traded sideways. So here we have Pinduoduo, and we could see again that the stock has basically just traded sideways and a little down over the last month. And then if we jump over to JD, which is another big Chinese firm, we could see a similar thing that over the last month, it's really just traded sideways and again, a little bit down. Alibaba, very similar. When we jump over to the month chart, again, trading sideways and a little bit down. So we would expect, that with a lot of these positive news coming out about delisting and no longer being a big threat, that a lot of these companies would have started to see, a lot of appreciation in their stock price. But overall, so far, we have not seen that. So that presents the opportunity to potentially still get in, as we're seeing these concerns subside, when they start getting priced back into the market, we could start seeing major moves in the stock price. Overall, like I always say, these are just my opinions. I do think that Alibaba has a lot of positivity going in front of it. I think the business case that, once we start seeing some of these policies go away, the zero pandemic policy in China, I think they will start to turn a corner. We have seen the Chinese economy get beaten down in a major way. We have seen even the US economy, get hurt. And a lot of people are projecting that it's going to get worse over 2023. In my opinion, I did just release a video that, the year after dropping by 20%, we actually tend to see, a positive increase in stock price over the next 3 years of around like 30%. So I am bullish on the stock market. I tend to always stay bullish. So keep that in mind when you are looking and watching my videos. But overall, make sure you're doing your own research and investing in companies that you believe in for the long term. You're not buying a stock price. You are buying a company that you have to believe in and think that it is going to be successful, over a long period of time. That is what's going to make you money over your investing career. So overall, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.